In my last update, I told you 74 cents was the floor. Break below that, and the stock was heading straight to 67 cents. And that is exactly what happened. On February 27th, 2026, DataVault AI touched an intraday low of 67 cents and 15 hundredths, nearly hitting my target, closing out the day at 70 cents and 85 hundredths. If you caught that video from February 22nd, you already knew this was coming. Welcome back to Smart Stock Sam, where we break down the trades before they happen, not after. And today we are doing a full deep dive into DVLT. Is DataVault AI worth buying right now after this warrant sell-off? Where is this stock heading next week? And more importantly, what does all of this mean for your portfolio? Here's the quick roadmap for today. We are going to validate the technical prediction, analyze whether the fundamentals actually support a recovery, unpack the Wall Street analyst targets, look at what institutional money is doing behind the scenes, and give you a clear trade setup with specific entry zones, resistance levels, and a stop loss. Then we are going to cover the risks, including the Nasdaq compliance notice, because on this channel, we never skip the fine print. Stay until the end because the squeeze setup alone might be the most important thing I say all video. Let's get into it. Let's go back to February 22nd. I laid out a very specific scenario. If DataVault could not hold that 74-cent support floor, gravity was going to take over and send this stock down to the 67-cent range. No guessing, no vague, it could go up or down hedge, a specific named target. Fast forward 5 trading days, the floor cracked, and the stock went exactly where I said it would. Now here's what's interesting. The stock touched 67 cents and 15 hundredths as an intraday low before buyers stepped in and pushed it back up to a close of 70 cents and 85 hundredths. That snapback matters. It tells us that there are buyers waiting in that zone. Real buyers, not retail panic buyers. Patient, calculated buyers who were waiting for exactly this price level. Does that mean the bottom is in? Not necessarily, but it does mean the technical roadmap is working, and if the roadmap got us here, it can get us to what comes next. Now let me ask you something. If DataVault AI is such a struggling sub-dollar penny stock, why is State Street Corporation holding over 10 million shares? Why is Vanguard in here with 1.29 million shares? Why does Jane Street, one of the most sophisticated high-frequency trading firms on the planet, have 4.4 million shares? These are not dumb money investors. These firms have entire floors of analysts, quant models, and risk management systems that most of us will never see. And they are buying DataVault AI at sub-dollar prices. Here's the raw data. Institutional ownership has increased by over 45% recently, now totaling 85 long-only holders. State Street alone increased its position by 51,505% in the fourth quarter. That is not a typo. They essentially went from almost nothing to over 10 million shares in a single quarter. What does that tell us? Smart money is positioning, not trading, positioning. There is a difference. Traders flip in and out over days or weeks. Positioning means they see something over a multi-year horizon that the current price simply does not reflect. And when institutions position at the bottom, retail investors who recognize the pattern early are the ones who benefit most when the thesis plays out. Could this still go wrong? Absolutely. But the presence of these names at these prices is not nothing. It is a signal worth paying attention to. Let's talk about what Wall Street actually thinks this stock is worth. The consensus mean price target from analysts sits at $4.08. $4.08. From a current price of 70 cents and 85 hundredths. That is a 475.86% potential upside. Almost 5 times your money from current levels, if the analysts are right. Maxim Group, a well-known institutional research firm, maintains a buy rating and recently raised their price objective from $3 to $4. The weighted average analyst consensus is a buy at 83%. Now, are analyst targets guaranteed? Absolutely not. And some sources, like Weiss Ratings, maintain a sell recommendation. But when you see a near 500% gap between where a stock is trading and where research analysts think it should be, especially with the institutional accumulation we just covered, that disconnect becomes very hard to ignore. The question worth asking is this: what would it take for DataVault AI to even get back to $1? That alone would be a 41% gain from current levels, and the catalyst to get there may already be in motion. Here is where this story gets genuinely interesting, because DataVault is not just some dormant shell company sitting on a dream. In just the past week, multiple catalysts dropped. DataVault launched a joint venture called Mandela Digital Ventures, a partnership with the Mandela family aimed at driving global financial inclusion using their Web3 and AI tokenization platforms. That is not a small announcement. That is a globally recognized legacy name attaching itself to this company's technology. DataVault expanded its blockchain partnership with Wellgistics Health to include healthcare as a service, targeting a global market projected to reach $600 billion by the year 2030. They also have a 50-50 revenue sharing agreement with the World Boxing Council for data tokenization, and they are expanding into South Korea with their T-Burn chain platform, targeting the K-pop and esports data asset market. Now let me ask you, what happens if even one of these partnerships gains real traction? What happens if the healthcare tokenization play lands even a fraction of that $600 billion market? What happens if the South Korea expansion generates headlines in a market that goes absolutely wild for digital collectibles and esports? The macro headwinds are real, but the catalysts are stacking up. Let's break down exactly what happened on the last trading day, February 27th. The stock closed at 70 cents and 85 hundredths, down 1.6% for the session. The intraday low of 67 cents and 15 hundredths touched our predicted target zone before buyers absorbed the selling pressure. Volume was elevated, which is actually constructive. It means the selling was getting done, not building. The broader market context matters here too. February 27th was a rough day across the board. A higher than expected 2.9% wholesale inflation report hit the tape, crushing hopes for early Federal Reserve interest rate cuts. Risk-off sentiment spread across growth and speculative names, which is exactly the category DVLT trades in. Here's the thing about macro sell-offs: they are noise. They create opportunities. When a fundamentally developing story sells off because of macro news that has nothing to do with its underlying business, that is exactly where patient investors find their entry. The bad news is priced in. The good news has not started yet. DVLT remains below its 50-day moving average of 79 cents and its 200-day moving average of $1.16. Those are the technical ceilings we need to reclaim. But you do not start a recovery by being above the moving averages. You start it by holding support and building from there. Now, let's talk about the risks, because this is Smart Stock Sam, and we always give you the full picture. On February 24th, DataVault received a Nasdaq minimum bid price deficiency notice for failing to maintain the $1 minimum for 30 consecutive business days. They now have 180 days until August 24th, 2026, to get the stock back above $1 for 10 consecutive trading days, or they risk a reverse stock split. A reverse split is not the end of the world, but it is a dilution of confidence, and it often creates a new wave of selling in the short term. There's also the matter of the warrant issuance and digital collectible dividends. Shareholders distributing the Josh Gibson coin and the Dream Bowl meme coin II must set up specific DataVault digital wallets to receive those assets, creating friction for traditional investors who want nothing to do with crypto infrastructure. The board also retains the right to revoke or change distribution dates at any time, which is a layer of uncertainty that investors need to understand before stepping in. To support the warrant issuance, the company also reduced its equity distribution program capacity from $50 million down to $33.4 million. These are real risks. Penny stocks at this stage carry elevated regulatory, operational, and dilution risk. Never invest more than you can afford to lose completely. Now let's talk strategy for next week. The technical setup is what I call a compressed spring. The stock has been squeezed down into a tight range near support. When compressed springs release, they tend to release fast and hard. Here is the trade setup I'm watching. The entry zone sits between 67 cents and 71 cents, what I'm calling the maximum pain bottom. If you're building a speculative position, this is your zone. Your stop loss should be placed below 66 cents. If we breach that level on volume, the thesis changes and you exit. On the upside, near-term resistance sits at 80 cents, a psychological level and a likely pause zone. If we can clear that, the relief rally target is 88 cents. Beyond that, reclaiming the 50-day moving average at 79 cents becomes the key milestone to watch. But here is the wild card that could accelerate everything, the short squeeze setup. Short interest in DVLT sits at 25.91% of the float, with 84.5 million shares short. On February 27th alone, the off-exchange short volume ratio hit 58.45%. With a days-to-cover ratio of 3.56, any meaningful positive catalyst could force shorts to cover rapidly, which means buyers piling on top of forced buying, which means the kind of vertical price action that makes headlines. Is a short squeeze guaranteed? Absolutely not. But the setup is there. And when you combine high short interest with institutional accumulation, sub-dollar prices, and a stack of pending catalysts, the question is not if this could move, but when. Before we wrap up, I need to be very clear. Everything discussed on this channel is for educational and informational purposes only. Nothing I say constitutes financial advice, investment advice, or a recommendation to buy or sell any security. DataVault AI is a high-risk, speculative penny stock. You could lose your entire investment. Always do your own due diligence. Consult a licensed financial advisor and never invest money you cannot afford to lose. Smart Stock. Sam is not a registered investment advisor. Past predictions do not guarantee future results. So let's bring it all home. DataVault AI is a high-risk, high-reward speculative play sitting at the intersection of blockchain tokenization, AI data infrastructure, and a compressed technical setup with serious short squeeze potential. The prediction from February 22nd played out with precision. Institutional money from State Street, Vanguard, and Jane Street is quietly accumulating at sub-dollar prices. Analyst consensus targets almost 500% upside, and a stack of global partnerships dropped in just the last week. The Nasdaq compliance clock is ticking. The risks are real, but so is the opportunity, if you understand what you're holding and why. So here is my question for you, and I genuinely want to hear your answer in the comments below. Do you think DataVault AI can recover above $1 before the August deadline on its own fundamentals? Or does it need a short squeeze to get there first? Drop your take down below. I read every single comment. If this analysis gave you value today, hit that like button. It genuinely helps more people find this channel. And if you are not already subscribed to Smart Stock Sam, what are you waiting for? Hit subscribe and turn on notifications so you never miss the next setup. I'll see you in the next video.